A warning late today from Caterpillar. The company sees the global economy limping along for a couple more years, and so the maker of construction, mining, and agriculture equipment cut its 2015 financial outlook late today, pointing to the sluggish economy around the world. Michael Sutherlin certainly knows a thing or two. He competes against Caterpillar as the CEO of mining equipment manufacturer Joy Global. He joins us from the Mine Expo International in Las Vegas. Mr. Sutherlin, any update on your financial outlook?
Well, I think in our third quarter earnings release, we have indicated that we expect the markets to go sideways for a while. We expect the markets to stabilize, and we believe that we're sort of at a bottom condition. We think we'll stay there for a few quarters. And as a result, it indicated that we expect our 2013 to be flat to down slightly from our 2012. And we indicated that at the end of our third quarter, and we still believe that that's a good outlook for our business right now.
In fact, at that time you said you didn't see any catalyst for equipment demand until there was strength in commodity demand. When are you forecasting the return to that commodity demand?
Well, we do have upsides in the commodities in our major markets. So if you take the U.S. market, for example, we've had a fairly significant correction to weaker electricity demand, but more importantly to low natural gas prices. But we saw switching back to coal in June and July as gas prices moved above $2.50. So it gave us a real confidence that the models that we have that indicate that switching is economic between gas and coal do work, and we will see more switching to coal as gas prices continue to migrate up to replacement cost. We have most of the excess capacity in the U.S. fleet is in coal-fired units, which gives us some near-term upside. But in the long term, the upside is really going to be driven by exports, and our customers are doubling the capacity in the export market, or capacity to export out into the international market.
Yeah, Mike, where are your best opportunities overseas? Talk to us about China.
China has been slowing, and we've seen that slowing in the power generation rates. So we see electricity demand. We're running at about half the growth rate we saw in the previous couple of years. That slowing has left China with surplus of mining capacity for coal. But at the same time, we saw imports continue to move into China, which clearly to us indicates that China has become a high-cost producer and imports have a competitive advantage.
Just a half minute left, but again to this outlook. Shares of Joy Global tonight around $60. In February they were 90 plus. What's the difference with the outlook today versus what it was in the first quarter of the calendar year?
Well, I think that there's a misunderstanding of how important the aftermarket is to our business. We generate 60% of our revenues out of our aftermarket sales, aftermarket service and support. That's a tremendous stabilizer to our business and has allowed us in 2009 to level revenues and increase earnings during that economic recession during 2009. So I think that we get overreaction when the commodity markets begin to peak, and I think that our business has demonstrated its ability to maneuver through that without the excessive downside people are expecting.
All right, looking at that aftermarket for parts and services after you sell those big pieces of equipment you can see behind you. Mike Sutherlin along with us, the CEO of Joy Global.